Welcome to your daily dose of dividend. Today we're going to analyze Mondelez International, and it has a market cap of $81 billion. So compared to its competitor Hershey at $43 billion, it's almost quite the size, market cap wise anyway. And it's also in the industry of confectioners, and it has big brands like Oreos, Philadelphia, Marabou, for example. During the last 10 years, it has lagged behind the S&P 500 a bit with its dividends reinvested. And if we take a look at the sales numbers, it's 2.1% growth, and that's an X. The earnings growth is very, very high though, 24%, so definitely a check mark there. But the future estimates of the earnings are a bit lower at 6.9%, so that's an X. The return on capital is 8.3%, and here we want above 12%. The debt is also quite high compared to its free cash flow, but take them 6.3 years to pay it off. But they are buying back shares at least, so that's a check mark. The yield is a respectable 2.4%, so that's a check mark. And the payout ratio is about 46.8%. The growth rate is actually double digits and 13%, so nice growth rate. But they have only been increasing the dividend for 8 years, so that's an X. We want over 10 years. All in all, you can see that it's actually only 5 out of 10 points for Mondelez. So if you take a look at the current valuation from gurufocus.com, we can see that it's a bit undervalued right now. So what's your thoughts on Mondelez for a dividend portfolio? Many investors right now are looking for consumer staples for a bit stability in their portfolio. Maybe Mondelez could be a nice addition for your portfolio. Further on, fast graphs. Here we are at the max years. You can see data from 2001. I usually zoom into 13 years, then we will see 10 years of history and 3 years of future estimates. And if you take a brief look here at the earnings growth, we can see it's actually extremely consistent and also consistently high, 10%. So it actually is in line with the S&P 500, which is quite remarkable for a consumer staple like Mondelez. Right now, it's trading about or a bit below its average price to earnings, which is still quite high for a food company. But with a growth of 10%, it could be a nice deal anyway. So here we can see if the analysts are right. It could actually be a total annual rate of return of 13%. So that's not too bad. That's it for Mondelez International. If you guys found this analysis informative, please leave a like and subscribe to the channel. That's it for this time. See you next time, guys. Bye.